Hi, Traders, it's Roberto. This is the analysis for coming week, May 15th through the 19th. First thing, I just wanted to just go over the setup. You see two platforms. The one on the right is a live account, and the one that I will be executing trades, and you're going to be able to see on the bottom here the entries, stop loss, and profit targets. The left is a demo account, which I just use for charting analysis. And so that said, let me just go over the trades that I think are going to work out next week. So the first one is Euro CAD. This is a 4-hour chart, and we have clear divergence, negative divergence on a 4-hour chart. We have swing patterns that are going in the opposite direction of wave patterns. And this is a very classic divergence setup where price breaks a trend line, breaks a swing point, then retraces, usually up to the 61% retracement level. So we take our Fibonacci tool, draw it from the swing high to the swing low, and that's our area of resistance. We're hoping that most likely price is going to react to the 61% retracement level, and you'll see a candlestick pattern, maybe a hammer, an inside bar, tweezer tops, any reversal candle on the 1 hour, on the 4-hour chart, and then you can scroll down to the 1-hour chart for your entries. If it does stall out at 61%, then you want to put a stop loss about 20 pips above this level. Okay, and our target is 147.20. So right there, from here to here, that should give us, from this level of resistance all the way down to the support, that's about 292 pips. Okay, the other one is Aussie New Zealand dollar. Again, this is a 4-hour chart, and most likely we're going to have a Monday retracement and a gap down possibly. Take your Fibonacci tool. Well, let me just go over the candlestick pattern. It's a bullish engulfing candle, market's overbought. We take the Fibonacci tool, draw from the swing low to the swing high, and expect price to come back down to 61% retracement level. Our stop loss will be below the swing low at 106.13, or 10 pips below that level, and start looking for entries around here. Color change candle strategy will work around 61%, candlestick pattern, a hammer, inside bar, anything that will give us a buy signal at this level. And then our target is all the way up here. So if it comes back down to 61% and turns around all the way up to 101.09, that's 212 pips to the upside. And that's almost the projected range from the rally on Friday. Well, it started on Thursday and continued on Friday. The other one, pound Aussie. Okay, again, we have divergence on this pair and a trend line break. Let's make this a little bit bigger. So there's the trend line break. There's the retracement. We have clear divergence right here. It goes all the way back from April 19th. There's our channel. Channel has been broken. There's the retracement. Expect the market to retest this level of resistance up here, and then I'll trade this off the 1-hour chart. So what I'm looking for is price to, here's the swing high and there's a swing low. there's a 61% retracement level, which is very close here to 61%. The first one is 50%, so anywhere around this level. This looks totally different on a 4-hour chart. Okay, on a 4-hour chart, we see price can go all the way up to 61%, which is the trend line. So anywhere up here would be fine, but you're looking for candlestick patterns, reversal candlestick patterns around this level. Okay, and then we're looking for a target of 171.40 area. So if it manages to get up here, we'll short and we take profit down there. That's pretty much it. Those three pairs: Aussie New Zealand, Euro CAD, Pound CAD. There is also a trade on Euro CAD. The only thing is I'm waiting for a confirmation. We have, the only problem with this one is now we have positive divergence on a 1-hour chart. But if we look at a 4-hour chart, I take that back. We have two lines of MACD crossing to the upside on the 4-hour chart. And there's the trend line. So yes, so again, this 1-hour divergence, probably it most likely will stop at the trend line. If it breaks above the trend line, of course, we're going to be looking for extension all the way up to 149.50 level up here. But if it bounces off this trend line and gives us a candlestick pattern, then we're looking for price to come back down to 146.76. So here's the swing high, here's the swing low. 61% retracement level falls exactly around that trend line. And that's what we're looking for, price to stall out at that level, turn around and head south. Our target is 146.76 down to the support. Okay, so that is pretty much it. I don't have at the moment any other trade strategies. Again, when you come to the trade room, of course on the left hand side you have the bulletin with trade signals, and on the right hand side we have the live account where you'll be able to easily see the activity that's going on the account. When I call out a trade, I immediately place a trade like this. You'll see it on the bottom. You can also take the trade, and on the left hand side is just for analysis and just using. I love using the Dukascopy platform because it's just so easy. It has quite a few tools and easily to be able to analyze the market using a clear chart. So that's it. If you have any questions, please email me. Have a good weekend, and thanks for watching.